Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how to get started with options trading. Now, if you're thinking about getting into options trading or you just began trading options, then today's video going to give you a step-by-step walkthrough of the strategies you need to master in order for you to continuously keep generating money. So, knowing that you're new to options, you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you how to get started with options from day one, from scratch. So for today's video, we're going to be using SoFi Technologies, and that ticker is going to be SOFI. Now, these are just going to be examples. These are not real trades. These are examples of if you want to get started with options today, this is the strategies you need to learn in order for you to not lose. Now, you guys know how we do it. We like to go ahead and get down and dirty with options, which means we're going to be showing you a step-by-step walkthrough of how these strategies are to be implemented. Now, to get started with options, you're going to need to go down to the bottom and hit Trade SoFi Options. That's going to go ahead and open up your options chain. Your option chain is going to be all this information down here. And what that does is that it gives you enough information for you to make a very informed decision. Now, we're going to be under the assumption that you only have a couple $1,000s in your portfolio. Let's say you only have $2,000. Now, ideally, if you want to use margin, you would need to have $2,000 and above. If you have less than $2,000, you could still trade options, but you're going to be doing it with an account known as a cash account. Now, if you guys need any information about these kind of accounts or anything I walk through this video today, just let me know in the comments below. Now, here's what we're going to do. We're going to go to sell. We're going to go to put. Now, this first option strategy is going to be based on you having a couple $1,000s in your portfolio. All you have is just cash, zero stocks. So you're going to go to sell. You're going to go to put. You're going to go ahead and choose your expiration date. Your expiration date you're going to choose is going to be July 3rd, which gives you 14 days to expiration. The reason why you're going to choose July 3rd is because, once again, you have a very small account, so you need cash flow. It makes no sense if you have a small account for you to go out for long expiration dates. You need to build as much cash flow as you can in order for you to grow your small account portfolio. Now we're going to go ahead below the current share price and we're going to choose a strike price. The strike price we're going to be going with is the 14.5. Now, the 14.5 is going to give you a chance of profit, as you can see here, of 75%. Remember that. It's going to be very important in our next option strategy for small accounts if you get started with options today. Now, with the 14.5 strike price, a 75% chance of profitability, you're going to get paid. One of the key ingredients if you're going to start options today or you're new to options trading is to get into selling option strategies. With selling options, you always receive premium. That premium accumulates as cash in your account, and that would help you to grow your small account. So we're going to go ahead, we're going to click into that. Okay, we're going to hit continue. Now, this option strategy, this first option strategy, take into account you only have cash in your portfolio, is going to be what's known as a cash secured put. In order for you to do the cash secured put, you will need to have cash in your account to as collateral. The amount of cash you're going to need in your account is whatever the strike price you choose. You're going to take the strike price you choose, you're going to multiply that by 100, and that is going to be the amount of collateral you need. So in this case, you're going to need $1,450. Let's go ahead and we're going to hit review. Now, in order for you to do this trade, you're going to be using $1,450 and you're going to be receiving cash. Now, this trade is what's known as a win-win option strategy. So come expiration date, if this share price right here happens to be above this price right here, then you get to keep your $29 and you get this amount of money released back to you and you're able to do this trade again and again. However, come expiration date, if this share price here now goes to the $14 strike price or any price below your 14.5, then now once again you keep your $29, but now you're going to lose your $1,450. But that's okay. The reason why it's okay is because you're going to lose your $1,450, but now you're going to have 100 shares of this stock in your portfolio, which makes it a win-win option strategy. Once again, if you're new to option strategy and today's your first day trading option, this is a strategy you should definitely consider. Once again, that strategy is known as the cash secured put option strategy. Now, Everyone have different perspectives of the market. So let's say you don't want to have cash in your portfolio. You actually want to own something in your portfolio. You actually want to own stocks in your portfolio. Well, here's a strategy you can use. Once again, we're going to go to trade SoFi options. We're going to go to sell and call right now. Now, if you want to own stocks in your portfolio, that means you have to purchase them outright. So let's say you're going to go ahead, you're going to buy 100 shares of SoFi at 15.35. That's going to cost you $1,535. But now you own 100 shares of stock in your portfolio. By owning 100 shares in stock in your portfolio, you can still go ahead and do options for income. Hence, this option strategy. So what we're going to do now, we're going to go over to sell, we're going to go to call, we're going to choose our expiration date. The expiration date is going to be July 3rd, and that gives you 14 days to expiration. Once again, the reason why you're going for the short expiration date is because you're trading with a small account. When trading with a small account, you need to build up cash flow in order for you to grow your small account. Now, you're going to go ahead, you're going to choose a strike price above the current share price, and we're going to go with the 16.5. The reason why I'm going with the 16.5 is because that gives me an 80% chance of profitability. Now, remember, the first option strategy, we went with a 75% chance of profit. A 75% chance of profit with the first option strategy is entirely acceptable. The reason why you need to go with a higher chance of profitability with this option strategy is simply because the stock market usually goes up way more than it goes down. So you need to choose a high chance of profitability. The other reason for high chance of profitability, I'm going to get into once I show you how the trade could go. So a 16.5 strike price, an 80% chance of profitability. And once again, the key ingredient when starting to trade options is to receive money. The amount of money you're going to be receiving is going to be 0.25 or $25. As you well know, each option contract contains 100 shares. You simply multiply 100 shares by your 0.25, and that's going to give you $25. This new option strategy is what's known as a covered call option strategy. The covered call option strategy only works if you use your shares in your portfolio as collateral. So with this option strategy, you would need to own the shares. Now we're going to go ahead to review. Now, for this option strategy, once again, this is an income generating option strategy. So you're going to be paid. The amount you're going to be paid is going to be $24.96, or let's just round it off to $25. Now, how does this trade go? Come expiration date, if this share price here is trading at any price below the 16.5 price here, then you're going to get to keep your 100 shares that you use as collateral. And most importantly, you get to keep this $25 here. That $25 is what's going to help you grow your small account portfolio. Now, the other way this trade could go is that come expiration date once again, if this share price right here happens to go above your 16.5, then you're going to lose your 100 shares. But it's okay. The reason why it's okay is that you're going to lose your 100 shares, but now you're going to have cash in your portfolio. The reason you're going to have cash in your portfolio is because you're going to be what's known as assigned. Assignment simply means they're going to sell your 100 shares at the strike price you choose, which is going to be 16.5. So now you're going to have $1,650 in your portfolio. But remember, when you bought 100 shares, you bought it at 15.35. Let's round it up to 15.5 just for purposes of this video. So now your portfolio is going to be up the difference between your 1650 and your 15.5, and that's going to be $1. Once again, options are a leverage product. So that $1 you multiply by 100 shares, and that's going to be $100. So your portfolio now is going to be up $100 plus your $25 here. So once again, this new option strategy is also a win-win option strategy. Now, for those of you that have accounts that's less than $1,000, do not worry. I do have something for you guys as well. So let's go ahead and jump into that. We're going to change the stock right now, and now we're going to go to the Spider ETF, and that ticker is going to be SPY. Now, these new option strategies cater specifically if you're trading with a very small account. Now, first of all, you should not be trading for a very small account, only hundreds of dollars. It's going to be very, very hard to grow. But if you do want to grow it, it can be done. The reason why I know it can be done because I did it. So we're going to go ahead to trade SPY options. And now we're going to start off just how we start off with the first one on SoFi. We're going to go to sell. We're going to go to put. We're going to choose the exact same strike date. Remember, the short strike date because you're trying to build cash flow. And that's going to be July 3rd, 14 days to expiration. Now we're going to go ahead and we're going to choose our strike price, and the strike price is going to be below the share price. We're going to be going with let's look for a 75% chance of profit, and that's going to be the 587 strike. As you can see here, 75% chance of profit. Let's go ahead. We're going to click that. Now, that is the first leg of this two-leg option strategy. This is what's going to be known as a spread. Most importantly, a credit spread. The word credit spread simply means you're going to receive money once you do this option strategy. Now we're going to go over, we're going to flip the switch. We're going to go to buy, we're going to go to put while maintaining the exact same strike date, and we're going to choose the strike price right below. Let's go ahead, let's click into that. Let's hit continue, and let's hit review once again. This new option strategy is known as the put credit spread. Now, the put credit spread works perfectly if you only have a couple $100 in your portfolio. And the reason for that is that there's an ease of entry into this option strategy. If you were to do this option strategy, the only amount you would pretty much need is $100 to be left as collateral. Remember, our previous two option strategies, you needed to have $1,500 or you need to own 100 shares. This new option strategy negates all of that. All you need to do is just have $100. Now, by doing this option strategy, which I just mentioned is an income generating option strategy, you're going to be paid. The amount you're going to be paid is going to be $23. Now, always try your best not to get caught up with the monetary value of what you receive. Always try to put it into some kind of percentage form. So if we were to divide $23 here by your $100, your return on this is going to be 23%. If you're new to options, I'm not sure if you're going to understand that, but 23% return is an extremely high return. So if you only have a couple $100 and you only want to do small account trading, then this is an option strategy you should consider. Once again, this is a put credit spread. There's a very ease of entry into this because you only need a small amount of money in order to get into this trade. Now, if you are trading with an account, let's say $500, please only do one contract. By doing multiple contracts, that is how going to put you at risk of blowing up your account. If you don't understand what blowing up your account means quite yet, it means you lose all your money and you have to start from zero. Now, for those of you now that actually have a different outlook on the market, let's say you're bearish on the market, you don't think the market is going to go up, well, this is an option strategy you could use. So now we're going to go ahead, we're going to go to sell and call, and we're going to choose the exact same strike date. Remember, the strike date is extremely important when trading options. And now we're going to choose a strike price above the current share price. Remember, in the previous example, I did mention when you go into the top side of the share price, you always want to choose a chance of profitability that's a lot higher. So we're going to be going with the 81% chance of profit. That so happens to coincide with the $610 strike price. And we're going to go ahead, we're going to select that one. Now we're going to go over to buy and call, maintaining the exact same strike date, and we're going to choose the strike price right above. So that's going to give us the 611. We're going to go ahead, we're going to click into that one. We're going to hit continue. We're going to hit review order. Now, this is a new option strategy that caters if you're only trading with a couple $100 in your portfolio. This new option strategy is known as the call credit spread. The call credit spread, once again, is a defined option strategy, means that there's a certain amount you can lose. The amount you can lose is always going to be the amount you put up as collateral. In this case, once again, like the previous example, the amount of collateral you're going to have to leave is going to be $100. Your return on investment or your investment gains is going to be $26.92, or let's round it up to $27. If you were to divide $27 by $100, you're going to see that your return is going to be 27%. Once again, 27% is an extremely high return. So there you have it. If you were to start options trading today, or you're actually thinking of getting into the option strategies, then these are the option strategies you should definitely consider. The first one is going to cater to if you have a few $1,000s in your portfolio and you only have cash, then you should consider the cash secured put option strategy. Now, if you prefer to own stuff, you want to own the stocks in your portfolio, that's quite all right. Then you should definitely consider the covered call option strategy. In that strategy, you need to own the shares and then you're going to use it as collateral in order for it to make money. Now, if you want to start off like how I started off with just a couple $100 in your portfolio, then it's quite simple. You should definitely consider the put credit spread and also the call credit spread. What these spreads do is that it allows you to trade and you only have to put up a couple $100 as collateral in your portfolio. Now, there you have it, investors and future investors. If I were to start options trading right now, the first thing I would do is get into options for income. So whenever I do these options, I get cash in my account. Now, if you guys have any questions about any of the strategies we did mention there, or you want to learn these option strategies, I do offer one-on-one coaching. That link is going to be in the description below. Now, go ahead, like the video, subscribe to the channel. Make sure to hit that notification bell. Whenever I post a video, you will be alerted. But most importantly, if you are someone or someone else out there is trying to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can get away from that 9 to 5 or supplement the 9 to 5 with income generating options. So until the next video, keep pushing your investments.